Yesterday, Tesla published its fourth quarter and year-end report for 2018, detailing slightly higher revenue than many analysts had predicted, as well as a slightly smaller profit than Wall Street had expected. And while share prices did fall in after-hours trading after the news that Tesla's CFO Deepak Ahuja would be retiring from his role and going to be replaced by Zach Kirkhorn, Tesla's overall Q4 figures seem to be not a huge surprise to anyone who's been watching the company closely. But what does it tell us about how Tesla's year really was? What can we learn about the future of the company? And what snippets of information did we get from Tesla CEO Elon Musk in the quarterly earnings call after? First up, let's talk about the overall figures. Overall, in quarter four, Tesla recorded a total of $7.23 billion in revenue, up from the $7.08 billion that Wall Street had expected it would. At the same time, Tesla's shares are a little lower than expected, returning an adjusted earnings per share of $1.93. That's lower than the $2.90 per share of the adjusted profit in Q3, but it's far better than the $3.04 loss recorded in Q4 2017. Examined in context of the entire year, those two final quarters certainly helped Tesla finish far stronger than it would have otherwise done, recording a yearly adjusted net loss of $1.33 per share. Assuming Tesla continues the trend it's been following for the past two quarters, however, its year-end 2019 financials should report an easy profit throughout the year. In its earnings report, Tesla noted that its quarterly operating income remained stable despite a decline in earnings from the sale of zero-emission vehicle credits and the effects that the ongoing US-China trade war had on the company, namely higher import duties on Chinese components and a price reduction by Tesla for the Chinese market to negate those nasty import duty price hikes. Nevertheless, Tesla's continued drop in production costs for Model 3, as well as continued cost savings within the company, has given it a far healthier position than it had 6 months ago. Looking forward, Tesla says it will have, quote, sufficient cash on hand to comfortably settle in cash our convertible bond that will mature in March 2019, something which analysts had questioned until fairly recently. Production and sales, of course, also increased in the last quarter, with Tesla shipping nearly 99,500 Model S and Model X cars combined in total for the whole year, and nearly 140,000 Model 3s for 2018 in total. To account for all of these new vehicles, Tesla opened 27 new store and service locations across the world in Q4, but also acknowledged that the total Tesla fleet growth in 2018, 85% over previous years, meant that more work would be needed this year to ensure service centers could operate as efficiently and as quickly as possible. To help with this, it's promised to switch some of its service centers to two-shift operations, as well as increase the numbers of mobile service teams on the road. As for looking forward, well, in the earnings report and during the earnings call, Tesla CEO Elon Musk laid out some of the things the company hopes to accomplish this year, as well as set a production guidance of between 350 to 500,000 Model 3s for 2019, even if the economy heads towards a recession. While Tesla is still very much focused on Model 3, Musk says we'll see Tesla continue to work on both Model Y and Tesla Semi development, as well as continued construction of its Gigafactory in Shanghai. In addition to Model Y, which is expected to reach volume production by the end of next year and, says Tesla, will share about 75% of the Model 3's components, Musk remained hopeful that Tesla will be able to unveil the Tesla pickup this year. While it won't enter production in 2019, its unveiling would be in line with Tesla's current reveal, develop, and produce cycles. The earnings call, in which Musk answered some questions from regular Tesla shareholders thanks to a tie-up between Say and Galileo Russell, also told us some interesting things about the Autopilot system. With full autonomy still not pushed to customers' cars yet, Musk has blamed regulators for this. He said that the Autopilot currently being worked on will work with traffic light recognition and navigating complex parking lots, which I'm guessing would further enhanced summon. Musk also added that full autopilot capability without requiring indicator stalk pressers was on the way, likely in the US very soon, and then other markets after that, as soon as regulatory approval was given. And that standard range Model 3, well, Musk said we should see production start for that sometime in the middle of the year, with Musk adding that he believed Tesla's cash management had got to a point where it was starting to become a whole lot more possible to produce Model 3 than it once was. Sadly, however, Musk didn't commit to offering insight into when Model 3 leasing would be introduced, stating instead that it would be introduced sometime later this year, probably. The final biggie that's worth taking away from the earnings call is the fact that Musk said Tesla is working hard to improve its customer service experience, noting that Tesla's mobile service fleet is far easier to scale up quickly than a brick-and-mortar service solution. In addition, Musk said Tesla plans to use its in-vehicle diagnostics and in-car smarts to improve the whole service experience. For example, notifying Tesla that there's a problem with a car or a breakdown before the car has even come to a halt, ensuring that there's a tow truck on the way before the customer has even a chance to reach for their phone. At the same time, Musk said Tesla will fix the, quote, strategic error of having service parts at distribution warehouses rather than service centres. Now, Musk says Tesla service centres will keep all common parts in stock, something which he says will make it far easier to enable a fast turnaround on cars. So that's it. Those are Tesla's Q4 figures. Did they impress you or concern you? And what does 2019 have in store for the company? Leave your thoughts in the comments below. That's it. Thanks for watching. Let us know if you liked it or you didn't like it below. Scribble a comment. And if you want to support the show, there are a whole host of links below to help you do just that. I'll be back soon with another episode, but until then, keep evolving.